Hi, Warriors. Let's go to work. AJ, Michael, everyone. How's everyone doing? Team. Best team on the net. Find a better team, and I want to know about it. I want to check them out. So let's start off with US dollar yen. I'll start with Kman. Good morning. How are you, buddy?
Hi, Dale. Hello, everybody.
And Ryan was talking yesterday about 145. I think we got very close to it. 44.60 or so.
Yeah,
70.
we went up to call it 70.
Yeah.
Yeah.
Is that enough?
Yeah, it's the zone, right? Everybody's watching it. And then a bit later, we had a bit of a move down from 60, 65 down to 144.20 very quickly. But we haven't seen anything. But the officials are still commenting. On the other hand, UEDA yesterday tells everybody that we have to be patient. So it's over to the end of month flows now, and we'll see where those take us. But if you look at especially the yen crosses, they're still not coming off, right?
Okay.
The dollar may be a little weaker than the highs, but if you look at those euro yen in particular, is still extremely big.
Canada got close to those that breakdown level, didn't it? No, it missed. Yeah.
Yeah, it just ran short of it, right?
That's more bearish. It's more bearish if it doesn't get there, don't you think?
Yes, that is one thing. And then again, we have end of month quarter flows and stuff. I was eyeing that 133 level to try and flip around.
Yeah.
I was a little long, took it off yesterday on the fixing as per plan, and then was eyeing for the 133 to try the other side, but it didn't get there.
Okay. Dixie kind of has a look of a little ABC up here. This may have been enough, which means forget about buying euro at 108 if that's the case. Euro has the best looking chart. Like euro has the best chance of making new highs sooner than like cable, which is a switch. I still think this euro pound is good. It looks good to me. It's done nothing wrong all week. Aussie getting a little bit of a pop, but you know what? I think even if the Dixie took out its lows recently, that we may only get, say we went to par, which is 240 points from here.
0.5%.
Yeah, we may not make new highs in Aussie.
Yeah, that's a possibility.
That's something I'll be looking for. And I still think Euro's got 112 in it. So this week
on the Aussie, we have to watch out for
risk off
out of the blue, because they are at the end of their fiscal year actually this week. So there may be some flows out of the blue somewhere we have to reckon with. So I'd say keep that in mind, and perhaps it's going to give opportunities, if we see flows one side or the other.
Okay. Ryan, any comment on USD yuan trying the highs again? It looks like it's going to try.
Yeah, they came out again last night, the Chinese bank selling dollars to try and slow it, but that didn't have much effect as it did yesterday. And we couldn't break the highs today, but it's not dipping significantly. So it looks like a slowing exercise more than sticking a full block in the way. So until we get something different, I think this continues a bit higher.
And on the yen, it got to within, when I was talking to Kman, 30 pips of where you thought we might see a ceiling. Is that enough with this candle to attempt shorts here, or you just sit on your hands still maybe next week?
Yeah, I mean, I thought we were going to start hitting some trouble when we got to around 144.80, sort of 20 pips before the figure. That's where we might get something. It took a slap. We don't know why it took a slap. Could just be nerves. There's so many people watching this 145. It only takes, someone to stick in a big order and everyone goes, oh, what's happened there? And everyone hits the sell button. So
who did that slap? Will Smith?
That was a good one.
Just kidding, huh?
That was a good one.
You slapping the yen because he's short or something?
Yeah.
Okay.
The same feeling with this. You know, it's difficult. As I said on the flow show this morning, the risk is big, the reward isn't at the moment.
Okay.
Because you know you could get in longs and think it's going to continue high, and they come and intervene, or you can get short thinking they're going to intervene, and you find yourself 300 pips offside. So it's you've got to scalp it. That's the only way to trade this at the moment. I mean, I tried a little guppy long yesterday, got a bit off, took a bit off this morning when it got the slap, and it's a hairy time. I think if you get clear above 145, you know, and put to bed the 145 level as being significant, then maybe you probably see 147s, 148 soon after.
I think on the 10-year, guys, you could move up knowing that we're going to start heading lower. I don't even think you have to wait for 360, 370. It looks like an important level. Look at all the hits here. 370, 370, 370, 370. So I think this
And it's level, isn't it?
Yeah. So under 370, you know, then you challenge 360, but I don't think you have to wait for 360. 370, you can move up an entry on, close its back under there. That's the way that looks. Risk on. Who's in the camp that we're going to make new highs, take out these highs? It's been a week or so. Or could this turn out to be a failing rally? Actually, NASDAQ has a little weaker chart. As you can tell, it's subtle. But in the S&Ps, we took out this high. See, you know, made new highs.
Stocks in the aftermarket did all right yesterday because
you brought it up.
Yeah.
And Steve said that they wouldn't do a stress test that they didn't know they all could pass.
Yep.
Right, Steve? So were you surprised they all passed?
Let me tell you something. If the day comes that they make a stress test and even a single of the big banks fail, I'm going to be unimaginably surprised.
Yeah, you would eat your hat.
I've told you before, they reverse engineer the process,
right,
and they create stress tests just to show confidence in the banking system after making sure that whatever stress test they will create is passable by every single big bank.
Okay, well, you know, I think what they should include in the bank's stress test is trading Bitcoin.
I doubt
500, down 500, up 500. Yeah, they should include having the risk manager have to scalp it for about a week and see if he passes the stress test. And you know, one thing for sure is he'll be stressed. So anyway, you know how I was talking about the grains, and they all took hits. So this could be setting up like the wheat here, a higher low. I would look at this between here and 640. Also the beans, you know, I probably could work underneath this, but I think it's this could be a nice break to buy. I think especially in the wheat, because can you imagine what would happen if that power plant went off, whoever does it in Ukraine, and eliminate one of the bread baskets of the world for many years? Now, I'm reading it wouldn't be as bad as Chernobyl because they have a lot of the reactors turned off, but it would be bad. You know, there's people talking false flags. This counteroffensive isn't going so well.
I can tell you with certainty that Chernobyl was really bad. Just imagine when Chernobyl happened, I was like 6.5 years old, and I remember it very, very vividly.
Yeah, did you have nightmares?
No, I'm not in that way, but I do remember people buying off everything from the supermarkets that was already available.
Yeah.
Then not touching, a series of products for a long period of time,
Yeah.
more than a year.
And we already have high food prices. So can you imagine that would be like,
Yeah.
famine time. Looking at the silver, high or low, gold trying to dig in here at 1900 almost seems a little convenient, but I wouldn't be short. I think we're going to get a nice nice rally back to 1980, 2000, and I actually think silver could trade above the 24 handle, maybe even above this in the coming weeks, and a lot of that will have to do with this topping. We'll see.
I think that will take a Fed effectively pausing for them to go. I mean, for them to rally quickly. I mean, I think eventually they'll get there and above. But if you're talking about in the short term, that will take a dovish Fed. And actually talking about the Fed, and they were all speaking yesterday, Lagarde and Powell and Bailey and Ueda, and I said this on the Flow Show. It's the words that they're using that we need to be careful. So Powell said, "Oh, we're a long way away from inflation hitting target, and we have a long way to go," or something like that. And that's true. But he wasn't talking about a long way to go in terms of monetary policy, or at least didn't mention it. And the thing that he did mention was that the majority of Fed members are looking at 2 hikes, potentially even more, and that's exactly what we had on the dot plot. So the markets kind of took that, and I was seeing comments saying, "Oh, very hawkish." Well, it's exactly what we knew so far. So nothing new on yesterday, even though some pundits want to make it sound like it was sensational in some way. So I think the way forward, the path forward, is unclear. I think the Bank of England has the most work to do. I've said it before, because of the way inflation is so sticky, and how wages are rising at a higher pace. So apart from them, though, we did get CPI, Eurozone CPI today. It was a little bit higher than expected. German CPI came in at HICP came in at 6.8 versus 6.7 expected. So 0.1 higher. Same with CPI on a year-on-year basis. Is not dropping from the previous print, but the general trend still is lower. So we wait to see a few more prints to see what happens. But Bailey actually himself on the UK side, he did say that we think that inflation is going to come down quite rapidly. I'd love to see what data he's basing that on, but there is a general idea that inflation is going to be dropping lower. As I said before, I think the UK is going to be more stubborn, but we have the next US CPI print, and there's quite a few pundits or analysts saying that we're going to have a very low 3-point-something%. So if we get a print like that, 3.1, 3.2, then you're getting really close now. And we also have to understand the effect of all this tightening has a big lag. And we can definitely agree that the effect of all this tightening has not been fully transferred to the economy and hasn't really been felt fully in terms of inflation. So I think if we do get a low print in the US, I think that's going to be the Fed done for now, at least. Even though they're not going to say it explicitly, they always want to err on the side of caution. Now on the other way, right? On the way up with inflation, they were cautious, transitory, all that. Now on the way down, it's coming down.
No, they were not cautious. They were the opposite of cautious. They were arrogant.
Yeah. Actually, you're right. Cautious is not the right word. They were kind of in disbelief. And now I think they are in disbelief on the way down. And if you look at the chart of how inflation went up and is coming down on a year-on-year basis, it's almost perfectly symmetrical. And so they're going to kind of try to talk the hawkish talk for as long as they can. And then obviously as inflation goes down towards target, they're going to celebrate and say it was all due to us. We did it. We are perfect. So
let me ask you this, Stel, if what's going to happen to yields? I mean, we're trapped in this range if they do go ahead and raise rates a quarter at the end of July.
Well, that's roughly what's priced in. I think, what, 80% chance of a hike. So
Okay.
if they do hike, I think yields
It's in the
might go.
market.
Sorry? Yeah, I
So
think 10-year
okay.
US might get to, 380, 390 really is the big level. We're at 375. Could we creep towards 390? Of course we could, but it's mostly priced in. So the big surprise obviously is going to be if they don't hike. That's the
Okay.
and
All
as I
right.
said before, I think, I know it's a bit controversial. I think we have found a medium term, a serious medium term top in yields, and I find it difficult to see how we're going to break out above 394%.
Okay.
In 10 years.
Okay. WTI, Steve, is trying to dig in and above these two lows. Possible that, yesterday's action looked pretty good. I mean, if you want to try the crude, you're wrong under 67, you buy this dip. And not only get out, maybe reverse out down here.
I think that the best thing for somebody to do here with crude is
Nothing.
do nothing. Yeah.
Okay. Okay,
We've been
Mr.
stuck.
Obvious.
We've been stuck in this consolidation for quite some time.
You like your new nickname?
Yeah. I think there are higher chances for an eventual move lower.
Yeah.
Out of this move. But whoever has tried trading it lately, I think they've had a really bad experience getting chopped up.
All right. Tell me there's global growth when you look at this.
Copper, eh?
Look at that. So another failing rally.
Yeah.
I mean, that can't be bullish for global growth because, I mean, I talked to someone yesterday and they rattled off all the, positive fundamentals about how long it takes to get a mine open and production is down and, the demand for copper and, a lot of people have been treating copper like it's a precious metal over the last couple of years. And
it definitely isn't a precious metal. I mean, it has totally different characteristics.
Dale, can you zoom out a little bit? Zoom out so you can see, say, the last 7-8 years of data. So on a daily is fine. Just zoom out, or a weekly, whatever you like. Whatever you like.
There you go.
Go zoom out just a little bit more, just a little bit more. So just change the scale. There you go. So basically, we're still seeing higher lows.
Okay.
And if you look at this on and if you go even further, actually, no, don't go further back. There's no point. But from 2020 onwards, higher lows, and we had an impulsive move as with everything post-COVID. And now, yes, we had a pretty strong drop in early 2022, but now we're consolidating. I mean, does this chart look bearish?
Yeah, it looks negative enough to me that I think we could see, this 3.25 level tested again, maybe $3.
I'm surprised it's not lower, given what we're seeing in manufacturing around the globe at the moment, particularly from the PMIs. I'm surprised this is not trading under $3.
Yeah, I'm not saying it's super bullish, but it's not bearish yet for me.
Okay, all right. Platinum has been under pressure. This is Peter Goodburn's buy area. Write it down around 800. And remember, he thinks that the better buys, if you're a metalhead, are going to be in the white stuff. Okay, silver, platinum, palladium. So I think we could get there over the coming weeks or months.
Well, the way it's trading, we can get there by Tuesday.
Are we closed Monday? The 4th is Tuesday. For open Monday or not? Anyone?
The what? Sorry.
Well, the 4th of July is next Tuesday. So.
Oh, is it? Okay.
Closed.
Okay.
So I don't know if we're open Monday or not.
Do you want a day off then, Dale?
Huh? Yeah, a month.
You're not on holiday, but you'll have to work until 1 p.m. Dale.
Okay.
1 p.m. Eastern time.
All right. So let me go to the whole team and go around highest conviction trade. And if you don't have one, that's fine too. Neutral. Highest conviction trade Kman.
I am a little short dollar into tomorrow. and then the whole new world can open. And one word about the Fed and those rate expectations. I think the major impact that we are going to have is not really on your 10-year, but just on the short end and the belly when they do something. And as we are seeing, the market is already kind of pricing that, taking the inversion a little bit deeper of the curve.
Okay.
And I think the major impact that we are going to see is rather on the short and the belly than really the long end on the US yields. That's going to be much more directed by real data, I think, instead of whatever they may happen now on inflation or central banks.
Okay. Just want to show a couple of tech stocks that I think, that's where, and the market's really all tech. I think it's 8 stocks. So I'm going to call them the Elite 8. And here's NVIDIA after the news that they can't sell chips to China anymore. And I think that most people would be able to recognize what might be setting up here if it has, if the comet can still streak across the sky one more time. 1, 2. I think if we make new highs, we're not going to confirm. Maybe it'll be under 70. And one of the major horsemen has had a little change of character here. Check out Microsoft. Okay. Apple's still going to new highs, but I mean, this was the one that really set off the May-June rally on an earnings report, and it might be putting in some type of right shoulder here. That's it. I wanted to show those things. The financials still, they aren't doing anything to that impressive. The regionals are just trying to hold, but they sure look vulnerable. And I think that, if they failed again, there'd be some risk off. Yeah, that's about it. Highest conviction trade for you, Ryan, going into the end of the week.
Yeah, I'm still going to look at euro dollar, see if we get an outlier move on the end of month stuff, maybe a move up into the 110s towards 111 for a little bit of a short. Conversely, on the other side, if we get a move sub 108s, maybe down to 107s, a buy down there. I doubt we'll get that far, but you never know in these moments what can happen at these fixes. So and then like Kay, let the noise die down and get back at it next week.
Do you think this was, I know you do a lot in euro pound, do you think this is just another bounce it's going to fail, or it's more significant than that?
I can see it failing. Book talking, I'd like a move down to 85 for a long, but the sentiment might have changed, so we might be looking for a move up. If we get up to 87s, 87.20s, that's a big level. I might fancy up there again, see what happens over this end of month stuff. But there's a strong chance we found a bottom down here now.
Well, we only have 1 day left, so let's see what the weekly looks like. So, they got all the longs here, we're gone on this. I think this 87 level, getting back above 87.20 or so, will be important for it to launch. But I'm kind of thinking, here we go. Stel, you were talking 92 when it did that spike on the crisis in gilts last fall. And you had what, about 30 seconds to be a seller at 92 that day. Do you think that we're going to head there again after the sell-off?
Not now. No, personally, I'm looking just like Ryan said, and it's scary when we look at the same things. Scary good, actually. Anyway, between 87 and 872, I'm going to definitely try a short in euro pound. And so that's one of the trades I'm looking at. The other one is dollar CAD. I want to sell the 133, 33 to 33.10. I want to sell that. So I am waiting. But to answer your question, given the central bank divergence, which I think will persist, I find it difficult to see how the euro pound can go above. Well, it's already rallied quite a bit. I can't see how it goes above 87, 872 for now.
Okay. And
Obviously, anything can happen.
This has been the star commodity for a long time, Michelle Schneider. Everyone's been talking sugar. You know, looks like, you know, we've entered a period. It almost looks like I think all the agricultural commodities had some bad days yesterday. So maybe you get a nice pullback to 20 cents or something. But looks ugly right now. Pull back on rains. Okay, so buy the rain break, right, DJ? Okay, so that's that. You know, a lot of people following sugar. So I showed that, and I don't know. I think that we have covered almost the whole board that I look at. I have an interview in 4 minutes. We have a new guest. Her handle is Mama Vester. So Kim's going to be with us. I think she hangs out with the Tasty Trade guys, and maybe someone could take over the charts for a couple of minutes so I could get ready for the interview. Don't raise your hands at once, or you guys could keep talking, and I'll be right back for the interview. Okay.
All right. Gotcha.
Do I have to? Let's say. Yep. CK. All right, that's our code word here at ForexAnalytix. Be right back, guys.
Got it.
Oh, give me.
So, who wants to take initiative?
Steve,
okay.
what you're doing today?
What? Sorry. Okay, I'll take the screen. Don't worry.
Okay.
I got it. So, all right. So, you know, we were talking about this on Flow Show again this morning. Yields. This looks like it doesn't look strong. You know, it's still within this kind of wedgie, almost like a channel. Not really. Technically, you could say that this whole structure could be bullish as a bullish consolidation, but it's taking way too long. And the fundamentals behind the yields picture for me are deteriorating. So I think that this is going to, if we get to 385, 390, I think it's going to get rejected. Of course, you know, there is a possibility that the Fed hike in July. That's actually the most likely scenario. But they also, you know, go all guns blazing, hawkish, and then all bets are off. But that's not my base case scenario. So I still think that yields are going lower going forward. Now, talking about yields, well, risk is obviously affected by yields, and look at the chart for the S&P. We have been saying ever since we broke out from 4,200 and even before, right? This move had been very strong, and we had indicated the big level. And ever since we broke out 4,200, we said there's absolutely no reason to be short or trying to short this unless you're scalping on a 1 minute chart or something. And the same applies now. You know, it's I see no technical evidence that we're anywhere near a turn, and pullbacks are very shallow, and we just keep going. So 4,400 is actually 4,430, let's say, is the next big level. After that, who knows, right? After that, we have a fib at 45 and something, 45 and change, but it just keeps looking strong without any pullbacks. And if the Fed do surprise in any way on the dovish side, then I think at least in the very short term, we can kiss goodbye any kind of bearish move in stocks. I don't know what you guys think, but I just see no evidence whatsoever to change my mind. I will. Yes, at some point I will. Remember, I have been bearish, I have been bullish. I change my mind
Yeah.
all the time. But you
Yeah.
know, there's the most dangerous thing for me, and unfortunately, it's the most how should I put it? It's the thing that comes naturally to humans.
Stel?
Oh,
GDP
Oh,
is
there we go.
out.
Higher, 2% versus
Yeah,
1.4
2%
expected.
versus 1.4 expected. The previous was 2.6.
Gotcha.
Initial jobless claims a little better than expected, 239 versus 265 expected. Same with continuous jobless claims, a little bit better than expected.
It's a good data all around, right?
US GDP price index slightly lower at 4.1 versus 4.2.
Yeah,
Okay,
10 years
cool.
popping pretty good, 378.
More soft landing data. That was quite a surprise upside in the final GDP number. Keeps the wolves from the door.
Yep.
Okay, good coverage, guys.
All right.
So
Enjoy
I'm
the
back.
interview, Dale.
I'm back. Kim, I see you. Can you please unmute if you can hear me?
Yes, I can hear you. Hello.
There we go. Very nice to meet you. Thank you for being gracious enough to
Nice to
want to
meet
come
you.
on our program and talk to our community. So I'd like to start with finding out what attracted people to the trading business, and what your first intro into the trading business was, Kim. Have you been doing this something you always wanted to do, something you just fell upon, or did you have influencers that showed you the way, and after you did it for a while you couldn't stop?
Well, a combination of all of those.
Okay.
First of all, thank you very much for having me on the show. I have always been interested in the stock market since I was a teenager. And so
Okay.
I used to look up the ticker symbols when we had newspapers.
Right.
And I would watch stocks move, and you didn't get real-time data at that time. And I just enjoyed, like back then, it would have been Nordstrom, and I think Costco was just starting, and Microsoft. And then from there, being a woman in trading and I live in Washington State, there weren't a lot of pathways, but I
Okay.
always was invested. So I would invest, a certain amount of my checks and every single month, and just really believe, and buy Money Magazine. And then
Okay.
fast forward, my husband was a floor trader. He was on the CME, traded for, S&P futures for Bear Stearns.
Okay.
The defunct Bear
What
Stearns.
years? Yeah. What years was he on the floor? Do you remember?
Late 80s until
Okay.
the 2002.
Okay.
Yeah,
Yeah. So
and
that's a nice stint. And that was the most
20
active
years.
bid on
He
the
was there
floor.
20 years.
Okay.
Yeah.
Did he
There's
ever have
the
any?
stories.
Yeah. How about did he have any out trades that he had to deal with during his career? I mean, some people lost their seats over out trades. You know what they are, right? Where
Well, he worked. Oh, go ahead. Sorry.
okay, he was just an order filler or he traded along. He traded his own account, but he also held a deck for Bear Stearns. Is that what he did?
No, he was their managing director for S&P
Oh.
futures.
Oh, okay. All right.
Yeah.
All
Yeah.
right.
So he was working for the bank. He wasn't trading his own money.
Okay.
So, but he had
Go ahead.
he had major client, Bear Stearns had huge
Yeah.
accounts back then. And
Yeah.
so he was there when the S&P futures trading basically started.
Okay.
So, and I mean, the stories that you hear of the floor traders, they're so fantastical.
Yeah. I had a seat that gave me trading privileges in S&Ps. It was the IOM division, index options market. So what a great place to learn. So were you picking his brain, and he brought work home? And congratulations on staying together. It's floor traders have one of the highest divorce rates of any occupation.
Well, I knew him then, but we didn't get together till after he was off the floor. He was in
Okay.
Chicago. I'm in Washington State.
Right.
So, however, at the same time, I do pick his brain all the time. He's amazing at charts. You know, floor traders, they have a feel for the market. They can tell, you know, whether that market's extended, you know, even with
Yeah.
his charts, he's like, put 3 NQs on short now, you know?
Right.
So,
Okay.
but my personal, but also being a floor trader, you see a lot of like really bad stuff go on, meaning people losing millions and millions and millions of dollars. So he always has that caution. And that's how he was trading his accounts. And I had my own accounts. And so anyway, in 2017, we were working with one of our stockbroker friends, and he's like, Kimberly, you're good enough to start taking part of this account over. I really want to mentor you. And, you know, and I feeling like I didn't like have an education in finance, but I have an education in psychology. I'm a university professor, and I'm also a mental health therapist. You kind of, you know, there's two sides of the coin. And so in 2018, I just fully took one of our accounts over. And one of the main reasons is, I think it was that December, the market really started crashing at that point. It wasn't a crash, but you remember that December where it went down dramatically.
Oh,
And
that's when Paul did a reverse. Once he held hands with Yellen and Bernanke, they sang Kumbaya, and he said, "Okay, that was it. He was wrong, tightening that last tightening." And Kramer went crazy like usual, and he reversed course. Okay, yes, I do remember.
And Mike Centinelli, I think, was on the floor screaming about it. I always enjoy watching him.
Oh yeah.
And so at that point, I'm like, there's got to be a way to hedge my, you know, I was trading my own account. There has to be a way to hedge this. And the broker we were using didn't really use options. And, you know, Mark uses futures, but, you know, anyway, so I just started looking at ways to hedge my account. And that was really what brought me into the options.
Okay.
And futures. So I do both of them. So then I'm not a full-time trader, but I manage my trading account. And so when I mean I'm not full-time, I do trade every day, or I'm engaged in the market every day, but it's not my full-time job.
Okay.
I don't know that I would want it as my full-time job.
Are you still, that explains to me why, I went to your stream and you were talking about, market trading psychology. And I think it's all in our heads. And we bring our paradigms that were developed when we were, 8 years old to the table in trading, depending upon your background. I could give an example that one of my trading weaknesses was coming out of winners too soon, because in my childhood, money was scarce. So to see a profit and risk a profit was difficult for me. You can have the best system in the world, and if your head isn't right, it's not going to matter. Is that what you've discovered with yourself and other people?
Yeah, very much so. And I grew up much the same way that you did. So I didn't grow up, I grew up with a single mom with 4 kids. So money was scarce.
Same thing here.
Yeah. And so, but also I have a value for money, right? So like, if I'm losing $200, even in my account, I don't like that. And at the same time, you're right. Like I've struggled with, especially when it's options. Stocks, I more am able to just let them ride. But with options or futures, I struggled to kind of let them ride and take the profits too quickly. And so that's what I've really, and that's why I don't like day trading. I really like swing trading, because swing trading to me gives me more time. It allows me to sit in a trade longer, and you have to know your style. I'm too, I'm too quick and I need to slow down, and swing trading allows me to slow down.
Okay, let me ask you about options and how you use them to hedge. Do you buy a lot of time when you're hedging your portfolio? Because I used to have a cynical view that options are like relationships. 90% of them expire worthless. All right. And maybe that's why you're quick to the exit, is because I
Yeah.
know I have statements I could paper the wall with of options that went worthless because I didn't have the discipline to get out. And I say, well, what the heck? Maybe it'll be a Lazarus, come back from the dead, right? So, and also I've been told by guys that use them, don't be a hero with your strikes. A lot of people like to really kind of leverage it and look for moves that rarely occur. And they go so deep out of the money that it's really not much of a hedge for them. So tell us how you structure a hedge.
So if I'm doing a true hedge against stocks that I own, I'm selling covered calls. And I usually go to the 0.25 or 0.30 delta. And I'm typically going about 30 days out. If earnings is coming, I might go closer, date expiry wise, because you usually get higher premium.
Right.
And also though, sometimes what I'll do, and I just did this with Google this week or last week, I put a hedge wrapper on. Google was kind of topping out. It wasn't getting the same bids as the rest of the tech stocks. So I sold calls and then I bought puts. So I paid for the trade.
Okay.
And
That's
I
like
did
a
that.
risk reversal, isn't it? When you
There's a formal name that I call it a hedge wrapper, but
okay, that's interesting. Okay.
it's like
All
a
right,
little
but
present when the stock's going down, I'm still making money.
right. Okay. Interesting. So do you hang out? I saw on your profile Tasty Trade. Are you a fan, or are you part of what they do, or what?
I love them. I did an article for them in their Luck Box magazine as the featured trader of the month. The thing I love about them, I've just met so many, in this business, obviously you can meet people that are maybe don't have the best intentions, and it's any business, but I think sometimes with trading and being on Twitter, and the people at Tasty Trade and also Black Box Stocks, I use a lot of their options tools. They are so real. Like Tom, Tony Batista, Tom Sosanoff.
Tony.
But the main reason why I joined is because as a woman, I was feeling isolated. There was nobody that was a mom that, that I knew that traded, right? And I'm getting all this input from all these guys with real great information, but like my priorities and how I wanted to trade felt a little bit different. And so Liz and Jenny of the Tasty Trade show, that's why I even got on Twitter. They have a show and they talk about their kids and they trade, and they're badass traders, right? They were on the options trading floor. And so that was my first tweet was, happy Mother's Day, Liz and Jenny. I joined Twitter because of you. And so that really gave me like this camaraderie of you can be a mom, you can trade, you can, do really well.
Well, the Bible labels wisdom she, gives it a feminine.
There you go.
Right. So you guys bring that to the table, and I've met a lot, and I've also talked to a lot of women that are traders that felt like you did, and I see them forming communities and supporting each other and cracking glass ceilings, and talking to you, it wouldn't matter your gender. I can tell after 5 minutes if somebody knows that they know. I know that they know. And so Michelle Schneider,
I love Mish's my heart. We've had the opportunity to get together. We do spaces. Wow. We're on the same spaces. She's come to Seattle a couple of times, and she just came a couple of months ago. And she knows her stuff. And Mark and I have went out with her and her husband. And I admire her, and to be a woman on the floor back in those days, to be anyone on the floor, only, Mark has said only 5% ever made it. And then
she had a bonus. She found a husband on the Kman floor.
Yeah.
Right. So, that was maybe her best trade on the floor.
Yeah.
What do you
They've
think?
been married a long time. I think
Yeah,
so.
so I mean that's they took long-term call options. They're in leaps with each other. So do you have a narrative that you work with, Kim? Do you have a view on the market, a view on you know, rates and the dollar, or are you more stock picking specific with your
No,
style?
I mean, I love research. Like I said, I teach, I've taught statistics at the college level. And that's, I love to do research. And right now I'm doing a lot of research, looking up peer-reviewed research articles on psychology and trading. So I love the macro. I look at the interest rates every single day.
Right.
I mean, I definitely follow them, watching that 2% go back up again, get to like 4.7, I think it recently got to, and it moved fast. It was trading like a meme stock,
Yeah. Yeah.
And the dollar, the dollar I don't pay as much attention to. I do look at it, because I try to look at all the different inputs, because I think that trading is context too. It's not just looking at one stock or, one option strategy. I try to employ a lot of different options and market strategies. And I think that's taking in all the data pieces. Sometimes it can be too much, and then I have a husband who is, particularly sometimes gets bearish. So I have to, we're a good balance. I'm like, no, it's time to get long.
And what do you think now
And
after the tremendous move we've had? S&P's trading around a little under 4,400. We've come off a little. There's been talk about a put call ratio. We're moving
being
in
the
the
highest.
breedometer. Yeah,
Yeah,
breedometer. Does that make you cautious on this market here?
for
That it's all
sure. So
tech?
right now, yes. And I'm really heavy tech in my trading account. I mean, my biggest position is Costco, but then I have a lot of tech. So I actually have started a short position in futures, and I'm using MNQ so I can scale in easier.
Yeah.
The thing about, obviously, as you know, the futures, the NQ moves so fast, and I like to be able to sit in a trade if I need to and
Is
not
that a mini
worry about it.
contract? Mini contract on it?
That's the micro.
Micro. Okay.
The micro. And I look at the overall deltas of my portfolio. So I kind of know where I'm comfortable with the deltas for me.
Yeah.
And so I will move them, I'll open them up and let them run higher, or then I'll start closing them down. So when I'm using short options against my stock or short futures, I'm also looking at my delta. And so I widen that, or I squeeze that down, and I use those different strategies to do that. But I'm also long white RTY. So I'm, that hasn't ran as much. Yeah.
Okay.
That's the Russell futures. And I just know, you can get really hammered being short because the market can keep running. And that's obviously happened to me. So I wanted to go long the index that hasn't had the same alpha, so to speak, or the same boost up.
Yeah.
And so I haven't offset it 1 for 1, but as the market's going up, I'm making gains. And then I also trade around that short position. So like when we got the big drop down, I didn't want to take it all off, but I took a couple off. And then when it moves back up, add a couple back on. Like I said, I'm looking at my overall deltas.
Okay.
So expanding it. And I do use.
Do you have a view on Apple? I'm short underwater. What would you tell me to do?
You're short underwater?
I'm short and underwater in Apple. What should I do, Kim?
Well, personally, the fact that it's reaching all-time highs, if you were short the options, or are you short the stock?
Long puts out into December.
Keep it.
Okay.
And roll them up. Roll. I mean, the thing is, Apple didn't get that move down, right?
Right.
So if I was long puts to December, depending on what the strike was, I might strangle it. So I might sell a call against it.
Okay. Yeah.
because
Okay.
then
That's great
that's,
advice.
sometimes I use, go ahead.
That's great advice on the fly, because
Yeah,
people when they're in trouble on a trade, what should I do, Dale? And I go, well, what was your plan? Where are you
yeah,
wrong?
yeah,
Isn't that really what it's
yeah,
all about, knowing where you're
yeah,
wrong?
yeah.
Ever decide not to forget where you were wrong? And do you stop loss orders on any of your trades?
Yeah, for
You
sure.
do?
I don't
Okay.
do it. I don't do it on most of the hedges because I'm long stocks.
Right.
So it just like right now I have a Super Bowl trade on Tesla. So I'm short the put
Right.
like at about 230 and I'm long on the call option, right? So I basically
Yeah.
paid for that trade.
Yeah.
And I have a stop loss on that.
Okay.
Just because Tesla can move like crazy, and I don't want that. I mean, the risk is I'm going to own Tesla at 230, right? But I
Right.
still have a stop loss on it. So, but
Okay.
I do look at the option flow, and there's been a lot of bullish calls on it. But what the biggest thing is don't size too big,
Yes.
where you can't. I've been sized too big, being short before the actual mini NQs.
Yes. Yeah.
And I like to sleep at night.
Yeah. I know what you mean. I'd like to ask you why you're on social media. Do you have a business model? Are you looking to trade OPM? I know you have accounts that you're already busy with, or you just like being out there and sharing and having the interaction with people. And
Yeah,
that's why you're on.
I love the interaction. Like I said, I was looking for people to build community with because trading can get very isolating.
Yeah.
And the wonderful thing about Twitter is I've met so many amazing people that I've met in person. As far as a business right now, my first goal is, I am finishing my licensure for my, counseling, and then I want to apply that to trading.
Okay. Yeah, there are a lot
You
of
know,
a few women that specialize in the psychology of trading. Forgot her name. Denise.
yes, that
You know who
Mish
I'm
talks
talking?
about her. Yeah,
Yeah. Yeah.
yeah. I
So
don't personally know her, but yes,
yeah.
I've heard that she's wonderful.
So you're going to have a bunch of traders on your couch down the road and trying to get to the bottom of it. I think that as a someone in the market, in some way we all are psychologists on ourselves, and
Yeah.
if we teach, we have to teach the psychology of one of my maxims is our pros know how to lose, so they have money left to be right with. So
I love that. I love
yeah,
that.
yeah, to teach
Yeah.
people to know how to lose.
Well, you brought the best point up in the beginning when you said that you bring yourself to the market, your childhood with you. I mean,
Yeah,
you
everything.
explained a really good, and the thing is, most of my clients are in tech, so I like high level thinkers. So for me, it's not about looking at, people that have serious mental illness. I'm more looking at people that are struggling with their everyday, like, how do I be a good manager? How do I motivate my employees? And then applying that to trading, how do I get myself out of the equation so that, like, for my weakness, I'm able to ride a trade out.
Yes.
And, a lot of that is just changing the way that you're thinking of it, changing, like you brought up paradigm, changing my worldview.
Right.
What lens am I looking through this at, right? If I'm
Okay.
looking at it to get rich quick, chances are I'm going to
You'll
lose all my
blow up.
money.
Yeah.
Right?
Did that ever happen to you?
No, but I don't risk like that. I mean,
Okay.
I
mean, it usually
have
happens to
long,
people at the beginning.
I mean, I've had bad trades that I didn't like. I remember one bad trade I had was I didn't really understand selling options at the time. And I'm just like, I'm going to sell 10 calls against Facebook. And some new, like it was short dated and some news came out and I was down 10,000 in. I mean, that was a really good lesson for me. But, you know, at the same time, I'm always long stocks. I'm a long-term investor. So, you know, like I said, my trading is swing, but I'm also long-term invested in the market. So it's hard to blow up if you have your long-term positions. And I don't margin. So I guess, you know, you kind of margin when you're using the futures. I mean, but I don't use margin. So I use everything cash secured. And so I'm not saying I wouldn't ever blow up. I just don't trade that way.
All right. Well, you know,
but
you may not blow
I've had
up.
rough times.
All right,
I've had rough
great
times.
segue. I want to know what your self-talk is during a drawdown.
During a drawdown, honestly, it is walking away from the screen.
Beautiful.
Because staring at that screen gets in your head, right? It's booking. I'm not really giving you good self-talk points though, but for me, it's booking green. So if I have, usually I have some trade short, right? Because I live with a ex, you know, futures trader. I have to have shorts on. I have to have shorts on. if I don't have shorts on.
We're so cynical.
Anyway, it's just the way that I like. That's the way it works for us.
He's lucky he has you, especially in the last couple months.
Oh my goodness.
Yeah.
And we do have this thing. I'm like, let me manage it.
Yeah.
Give me the charts, let me manage it. But on those days, it is booking that green, right? So instead of looking at my total profit loss, and especially because I'm long-term trader, it's not like I'm going to lose it in a day, right?
Right.
And I have really good growth stocks and, you know, they always invest in the best companies. So yes, there were big drawdowns, but at the same time, if I'm booking green, I would say last COVID,
that's pretty good.
The weird thing about COVID was I don't know why, but I was net short with all my puts and I really did well in COVID. The hard year for me was last year because you kept thinking it was going to end, right? And when it goes on and on and on and on, and there's no like bounce, we really didn't get a bounce except for that March and June of 2021. And so I think that was the mental grading. And I will say at that time, that's where having somebody that you can bounce ideas off of, having some, you know, Mark kept telling me, get long, which he doesn't usually do. So when he's saying, like, I was already long, but he was like, take cash, invest it, start buying these stocks, right? Because when you're in the throes of it, you kind of think it's never going to end, even though I've seen it. Yeah,
you get paralyzed. So Kim, it was really interesting talking to you, and you know, you've survived an interview with me. You're now my trading warrior sister. So I appreciate you coming on, and would like to talk to you again. Why don't we leave it with, are you a believer we're in a new bull market?
I don't really like to do
not around. He's not around right now. You could.
No, he just walked out.
Okay.
He thinks we're extended, but he knows enough to know that markets can be irrational. I don't really like to do the bull or the bear side because I think then that gets me trading way too bullish or way too bearish, right? So I think it honestly just depends on what the Fed does, what the economy is going to do. Personally, I don't think we're going to all-time highs this year, and I don't think that we're going to hit the lows that we had before. I think we're going to keep range bound.
Okay.
Unless some global risk event happens, which you
like what almost happened last weekend.
Right, exactly.
Okay.
Yeah, and I will tell you,
Go ahead.
that
No.
event, Mark, I wanted to get short, and Mark was like, "Don't do it."
Yeah.
So that was really good.
Some of our best trades are the ones that we don't take, and avoiding losing trades does not show up on your P&L, but it certainly is almost as important as being in good trades.
Yep.
You know, avoiding the bad ones. It was a pleasure meeting you, Kim, and
It was such
I'm-
a pleasure. Thank you
yeah.
so much.
I'm rooting for you. Have a great trading summer, and maybe we could catch up in the fall.
Okay, thank you. Thank you so much
All
for having me on.
All right, and you could follow Kim at Mama Vester, MOMMA Vester, VESTOR. Say hello to Kim, say you saw her, and I think she's out there to interact. So take advantage of that. She's a pro. And
Thank you.
appreciate meeting you. Thank you, Kim.
Thank you. You too. Bye-bye.
All right. So that's a wrap, everybody. You could join the team in 15 minutes on the Morning Edge. And I'll see you guys tomorrow to wrap up the week. Good hunting, and don't just count your pips, count your blessings. Adios.